Alright, problem 6.8 is our source document problem. If you have a good understanding of this and you can read the transactions and journalize the transaction debit and credit format, try without reading the problem and looking at the source document. Challenge yourself a little more. We are Greg Fallier and we operate Showbiz Video. Again, we have the general ledger accounts. Those are the accounts that we can only use for our debit and credit transactions. So they're listed in our book. We have the source documents in our working papers, and we're using those source documents to journalize the transactions. Alright, on January 1st, we deposited $3,400 in receipts. Of that amount, $1,900 was VCR rentals and $1,500 was videotape rentals, receipt $435. So that's what we're in the business of doing, renting VCRs and videos. So we received cash for the amount of $3,400. We increased the asset account, cash and bank. We increased the two revenue accounts, video rental revenue, crediting video rental revenue for $1,500 and crediting VCR rental revenue for $1,900. Source document receipt $435. Our debits equal our credits. On the 3rd, we wrote check $1,250 for the $325 of equipment repairs. So we have an expense. We know expenses have normal debit balances. It increased that expense. So we debit equipment repair expense $325. Crediting cash and bank, we wrote a check, decreasing cash and bank $325, check $1,250 is our source document. On the 5th, we purchased $400 in videotapes from Palace Films on account, invoice PF32. So we purchased an asset on account. That asset is videotapes. So on our books, the videotapes are the asset. We increased the asset account videotapes, debiting videotapes $400. The payment is on account, so when we owe someone, it's a credit to accounts payable, Palace Films. It increased the accounts payable account, so we have to credit it $400, source document invoice PF32. On the 7th, we bought from New Media Suppliers $2,600 in video equipment. We made a down payment of $600 and agreed to pay the balance in 2 installments. Source documents are check $1,251 and invoice MN 101. So we're debiting the full amount of the equipment as an asset. We didn't have that asset before. We now have that asset. So we debit video equipment $2,600. I credit cash and bank. I wrote them a check. I decreased the asset account cash and bank by $600. And I owe the rest. When I owe, it's accounts payable. Accounts payable have a normal credit balance. So it increased what I owe to accounts payable, New Media Suppliers, $2,000. So debit video equipment $2,600, credit cash and bank $600, credit accounts payable, New Media Suppliers $2,000. My debits equal my credits, and it's invoice NM 101 and check $1,251 is our source document. On the 10th, we rented videos to Spring Branch School District. School District agreed to pay $1,800 at a later date. Sales invoice $1,650. Spring Branch School District owes us money. We keep track of what is owed to us in accounts receivable, and that increases with a debit. So we're debiting accounts receivable, Spring Branch School District, $1,800. We provided a service. In this case, our revenue account is video rental revenues. That increases with a credit. So I debit accounts receivable, Spring Branch School District, $1,800. Crediting video rental revenue, $1,800. And it's our sales invoice, $1,650 as the source document. On the 12th, we issued check $1,252 for $750 to Computer Horizons for the amount owed to them. We're making payment on account. We owe Computer Horizons money. To decrease accounts payable, it's a debit. I'm reducing what I owe. I debit accounts payable, Computer Horizons $750. I credit cash and bank $750, and the source document is check $1,252. On the 15th, we deposited $5,600 in receipts. VCR rental amount to $4,400, and videotape rentals were $1,200. Receipt $436. Another compound entry, we received cash for the full amount of, adding the two together, we received $5,600 in cash. When I receive cash, it increases the cash and bank account with a debit, debiting cash and bank $5,600. I provided two different types of revenue. Both have a credit balance. Both increase with a credit. So video rental revenue increased by $1,200. VCR rental revenue increased with a credit, $4,400. My debits equal my credits, and our source document is receipt 436. On the 18th, we paid Clearview window cleaners $100 for monthly window cleaning. Check $1,253. We're going to classify this as maintenance expense. All expenses have a normal debit balance and increase with a debit. We wrote a check. We know we decreased cash and bank. Debit maintenance expense $100. Credit cash and bank $100. And my source document is check $1,253. And the transaction on the 25th, we made a $1,000 installment payment toward the amount owed to New Media Suppliers by issuing check $1,254. We are making payment on account. To reduce what we owe on accounts payable has a normal credit balance, so we have to debit accounts payable for $1,000. Debiting accounts payable, New Media Suppliers, $1,000. I wrote a check. I'm decreasing cash and bank by $1,000. Crediting cash and bank, $1,000. Source document is check $1,254. We're asking the question, what were the total expenses incurred in January? The total expenses incurred in January were $425.